Good afternoon, everyone. This is Henry, and as we get into tonight's video newsletter, the trade of the week idea that I wanted to bring to you, I gotta tell you that I don't know the timing. Timing is always the art of making the fastest money, and that is still a little bit in question here for Taiwan Semi. However, I did want to bring it to you because there are a couple of things that I believe stand out. And if you're looking for something to trade, maybe to make an investment into the first half of 2026, especially if you have that longer duration timeline, I think this is worth considering. So what I start with is to show you the previous instance of this signal. Now this is a 2-day chart, which is going to be considerably faster than a weekly, but it's going to slow down the daily just a little bit. And I think that's helpful to give you bigger signals and to emphasize that duration may be key on this trade. But if we look back at this 2-day squeeze, what this technical indicator is helping us do is to identify moments of consolidation, moments where when those red dots show up, basically what it's telling us is that the product is trading sideways, that it is coiling, right? Because an equity is not always going to be trending. It goes through periods of consolidation, then in either the advance or the decline, and that's what we're studying, right? So when you see this as being the consolidation that is shown down here through the squeeze, when those dots transition to being green, that's the idea that the trending move is then underway. So you'll see that here with this squeeze, where that's been in play for a couple of months now, and the histogram is starting to shift from lower left to upper right. So those are some of the foundational pieces that I like on the 2-day chart. Then, if you come into the daily, this is where I'm telling you the timing is interesting, because if we think about that previous decline, and we can do that here through our time extensions, I want to look at that previous swing high against the swing low. That's a given number of trading days. And then I want to measure that against this swing high. Do you see how it's not perfect? Like a surgeon would look at that and say, well, that's not perfectly symmetrical. But an artist might look at it and say, well, you can measure here to here, or maybe you measure from here to here. The drawing that I'm showing you is measuring that first piece. All we're trying to estimate is that is this correction in time similar to this correction in time, because then we start thinking that the advances may be similar. So again, I want to highlight this by telling you if you want to trade it tomorrow, I still think going out into something like the February options will give yourself the gift of time. You can manage this position by staying above the 21 EMA, meaning you don't have to risk it all the way out into February. If you get 2 daily closes below that moving average, well then the timing is just not quite ready yet. But as long as you do not get a daily close under this level here at about 266, then that symmetry in time will still be one way of thinking. And then it's the question of, can we have a symmetrical move like what we saw back in here? And I think that could be a helpful roadmap as we get into 2026. So I hope you find that a helpful look on one of the more important semiconductor names out there. You guys have a great rest of your evening, and I hope to see you in the chat room tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.